Hello everyone, this is Deepak and with me is Sanjeev Gupta CPA, and we want to talk to you about our upcoming webinar that is focused on real estate. So Sanjeev ji, over the years, people have always talked to us and told us that real estate is a great investment, but the time has gone, you know. But now with the people getting scared of stock market, with inflation and all that, perhaps there are going to be a lot of opportunities in the real estate field. What do you think?
Always, the real estate is the number one investment when it comes to growing money and saving money. Not only it helps in taxes, but also growing that money also. So, anytime real estate is the best investment for few reasons. Number one, you're taking money from somewhere, someone else,
Yeah.
and using that money to grow that money. Okay, so that's leveraging. Second, you're investing in a asset which is going to generate income if you put it on rent.
Income producing, like if you invest in stocks and all that, so you get some dividends but not a whole lot.
Yes.
But here you get rental income.
Rental income, and you're not going to pay taxes on that one because depreciation is going to help you out. And depreciation is non-cash flow. You're not spending money to get depreciation. Depreciation is calculated based on the usage of the building of that real estate. So that's number three. Number four, if you sell those assets, you're subject to a preferential tax treatment. You're getting a capital gains, which is 15 to 20% federal. Think about this way: if you have a business and you're making $1 million, you're going to pay taxes for 37% federal. But here you're paying 15 to 20% only. You're making 15 to 20% is equal to making money, merit filing joint of 200K. Think about this. So 200K versus you can go to any limit. So if you sell it for 1 million plus in the capital gains, you're paying only 20% federal, 3.8% Medicare tax, plus California taxes. Of course, if you're in California, if you're investing in other states, the taxes in other states, you don't pay any taxes. So that's the fourth one. And fifth and last, but fifth thing is the security of that asset. It's an important security. You can bank on it anytime. You can take a loan from the bank. The bank will be willing to pay you money based on that asset value. And if you let's say you are in a downturn, or you are in a bankruptcy, or you are not making much money, you are looking for some resort to make money, you can always go back and take equity from your house, and you can use that money to sustain yourself. So, for these various reasons, it's very important that one should invest in real estate. But like I said, it's an investment, a great investment, but one should learn about those areas where to make money and grow money. So that's why we have this webinar.
So Sanjeev ji said very well, right? He's saying preferential tax treatment.
Yeah.
And that is what this webinar is all about. And I think Sanjeev ji kind of touched on various elements of it. For example, you made an income today. Technically, you should be paying taxes today, right? Because that's how the US tax system works. Right. But here's an opportunity for you to generate income today, but not pay taxes on it, right? Second thing Sanjeev ji talked about is you can generate a lot of income and pay less taxes in future as well. So that's another great way. And third thing Sanjeev ji said is you can actually leverage that property anytime, get your money out. So imagine, let's say you put in $100,000 to buy a particular house. 10 years down the road, house has appreciated. You can go to a bank and say, look, I want $200,000 out of that house. Right. So you put in 100,000, you took 200,000 out of it. So you already made 100% ROI on your property. You still have the property that is still producing income for you. And in future, whenever you do decide to sell it, you will be still treated better than if you were to produce income, let's say, on your regular W-2 job.
Right.
So a lot of great opportunities there. Yeah. But most of you will say, well, I already know that. So this webinar will cover a lot more details. For example, we have real estate professionals, people who can take advantage of that. So Sanjeev, you talk a little bit about that, if you don't mind.
Real estate professional is a very big word. Means when we talk about real estate professional, people think about, oh, you keep investing in real estate.
Or they think they're like a realtor.
Yeah, or a realtor. A real estate professional has three main things. One is your real estate should be a primary occupation. Secondly, you have to be a professional, passing the real estate exam, getting licensed. And third but not the least is the materiality of that investment. Means it should be material enough to become the main occupation of your investment. So you have to also go through a 750 hours, they say in the code, to get the to become a real estate professional. But when you look at real estate, it's not only real estate professional from the tax point of view, but also from the other deductions are there, like qualified business income deduction. In case if you are a real estate professional and you invest in real estate, 20% of your income from real estate will not be subject to taxes. Of course, you have to meet the parameters and other things. And on top, and the best thing that is happening right now is short-term rentals. People are putting their houses for Airbnb, and the Airbnb regulations are much simpler than becoming a real estate professional. So all this will be discussed in detail, how to use it, how to maximize, and how to use that to your advantage. If you come over, we can talk about this. We'll be talking about those strategies. What document you will need to make it a good tax benefit for you, and how and what things to be reported, how to be reported on the form. Now there are people who also do flipping the properties. They do flipping. They buy, sell, buy, sell. So what are the areas that you can look into that? So we can talk about that. And then also we have to understand that real estate is not only one item. It's a different component of real estate. It can be condo, it can be townhouse, it can be single family home, it can be multiple units, commercial buildings. So it can be anything. So we have to look into different component. And by the way, we're not talking about a primary residence.
Yes.
Which is also important.
And the reason being because we don't really consider primary residence as your investment.
But from tax point of view, it's very important.
But honestly, it comes with a lot of advantages.
Yeah, Section 121 rules, 2 out of 5 year rule. So we have a lot of things that we are going to cover in this webinar, because it's all about real estate. And when we talk about real estate, I'm very passionate about real estate.
Yeah. I'm sure Sanjeev, you own a lot of real estates. I own some, but not a whole lot. But let me just kind of rephrase some of the things Sanjeev said so you guys kind of remember them. So number one thing he talked about is real estate professional. So we'll talk about that. That doesn't necessarily mean just a realtor only. It had a large criteria. And the reason why we want to talk to you about is that, let's say if you have a W-2 job, but maybe you have a spouse who perhaps can qualify for that status, you can take a lot of extra deductions that you might not be utilizing.
And 750 hours requirement can be justified by one or both together. So it's not based upon per person if you're married for England.
Yeah, and don't get too much confused about that. I'm sure Sanjeev will explain that particular concept in great detail during the webinar. So that's a great one. If you're not using that deduction, you should definitely join that webinar and learn about that. Second thing Sanjeev talked about is short-term rentals. Now, for short-term rentals, you don't have to be a real estate professional. You could be a regular guy like me, and own short-term rentals, and you can use that income to offset your active income. So
losses from the real estate.
So your W-2 income, where you're paying the most taxes, you can use this income to reduce your taxable income using short-term rentals. So we'll talk about that. We will obviously talk about long-term rentals. How does that fit in? We will talk about diversification of properties, why you should consider not just single family homes, but you should perhaps also consider, commercial buildings, maybe office buildings, maybe multifamily. So a lot of different aspects. They all kind of come up with their own advantages and disadvantages. So we'll talk about all of those. We will obviously talk about your personal residence. And of course, we're going to talk about your properties in India. I think that's one of the questions people are always asking. They are buying the properties in India. How does that impact? What kind of impact does that have on our taxation system here in the US? Are there strategies that we can apply to leverage those? So we'll definitely talk about that. And whenever we have this money concept going on with India, there's always questions related to gifts and all that. So we'll briefly cover all of that as well. So I think it's going to be action-packed. If you have any interest in real estate whatsoever, then I would strongly recommend that you join this webinar to learn about all bunch of different strategies that you can actually apply this year and reduce your taxable income. So I think this could be a very well spent 1 hour to learn all bunch of good stuff. As usual, after the webinar, Sanjeev and I will be there. Obviously, you can ask your questions. So if something we missed or we didn't cover, Sanjeev will be there to answer those questions for you. And obviously, you guys are watching this video right here in the month of March. And as you guys know, if you're in the state of California, our tax deadline has been extended till October 16th. Am I correct, Sanjeev ji?
Yes, till October 16th for California, Georgia, and Arkansas, I think. Georgia, California, and Alabama.
Okay, so one point I do want to make as a reminder, because I get a lot of emails and messages on Facebook and whatnot. One of the questions people keep asking, and I want Sanjeev to clarify this as well, is look, our deadline has been extended. Do I need to pay any kind of penalty for not making my tax payments?
So that's a very, very good question. So extension is only for filing the return. Okay, so it's not extension for making the tax payment. Now, that being said, we have to understand this clearly. If you made a lot of money last year, whether through RSUs, ISOs, ESPPs, or through business sales, or sale of property, or sale of any other asset, or you are lucky, you get some money, you get a lot of money. If you made a lot of money can be 200K, it can be 300K, it can be anything more than that. So plus your W2 income, plus all your other income, and you do not pay taxes on them. Now, what is a normal tax rate? It can be 20%, it can be 25% of your federal tax rate. So if you're not paying that 25% federal tax rate on that income, that means you are underpaid those taxes. Now, you should have paid that taxes in 4 equal installments during that year, for last year. So that's 4 installments are April 1st, then June 1st, then September 1st, and January 15th of the next year. April 15th, June 15th, September 15th, and January 15th of next year, not the first one. So if you have not paid those installment in the equal installment, then you're subject to penalties if you extend your filing till October 16th. In that case, it's better that you file the return as soon as possible because you owe taxes. Now, that's one thing. Second thing is, if you are having investment or properties in other states, or you're having a business interest in other states, those states have not extended their deadline. So you have to be very careful. Other than these 3 states, if you have investment in other states, you have to file by April 18th or file extension and do the return filing. If you don't file extension, again, that's a problem. You are subject to penalties. So this is a weird tax year for a lot of people who have investment in multiple states or who have a lot of tax due. My advice to them, if you have tax due, forget about October 16. Try to file your tax return as soon as possible with your tax payments.
Yeah, so I hope a lot of people get this message. Maybe you can forward this video to your friends and family members, because believe me, I've been getting a lot of messages online asking about this one question. Hey, you know what? I sold the property back in March. Can I wait till October to file my tax? Or you can, but whatever taxes were due to you back in March, you will be penalized for not paying those taxes on time.
It's not an extension of tax payment, it's an extension of the period from January 15 till October 16. But what about the prior years? Because the tax is due on the prior year income, not in the current year income.
Yeah, so please do pay attention to that. Go ahead and file that. Now, coming back to, we have 2 more events going on. So we will have a live event that's going to happen in August, where Sanjeevji will talk about, in general, other kind of tax planning strategies. So that will be live event right here in Milpitas, right, Sanjeevji?
Yes.
So that one you can go on our website. There are 2 buttons right on the homepage, a live seminar and webinar, so you can sign up for both of those. And then at the end of the year, in the December, usually in the second week or first week, but I think more than likely it's going to be in the second week, we will have what we call Wealth Summit. So that's our largest event of the year. So look forward to that. If you have not attended that, I would strongly recommend come check it out. You will love it. It's a lot of energy. We are there whole day long. Over the year, you'll find out more information about it. So those are the 2 more other events for this year that we are looking forward to. So once again, thank you, Sanjeevji, for clarifying some of those questions. I think I'm excited about real estate. I love real estate. I think it's a great way to build wealth.
Oh, yeah, of course. We're not only looking at real estate, also in the webinar, we have that.
That's right. So I'll do a separate video on that concept. And by the way, one thing we did not really talk about today on real estate, Sanjeevji, is the benefit of inheriting real estate.
Yeah.
That's a big one too,
and
right?
Even exchange and other things,
right?
To step-up basis, everything. So, of course, there are a lot of things.
So you can imagine we can probably do a 5-hour webinar just on real estate alone. It's a lot of information. So please do join us. It's free, doesn't cost you anything. You can do it from your home. Grab a coffee and join us that day. And if you have any questions, send it my way. You can join my WhatsApp group. You can reach out to me through that group, and I can make sure that I get all of your questions answered. Thank you so much, Sanjeevji, and I'll look forward to seeing you on that webinar.
Thank you.